It is important to understand that mortgage rates are not based on current economic conditions. They're based on forecasts, on projections of these economic conditions months and years down the road. Now, these forecasts are constantly changing based on incoming economic data, based on comments from Fed presidents, based on headlines, not just here in the US, but also globally. This all adjusts how the markets are anticipating these events years down the road. Remember, they want to move in anticipation of the event, right? So as data comes in, maybe pointing to a more resilient economy than the Fed might be comfortable with, they might be expecting the Fed might hike again, or maybe hold rates for longer than they had previously forecasted. A lot of the change has not just been to whether or not the Fed's going to hike here in June or here in this week, but also rate cuts by the end of the year. Back in May, they were looking at 3 to 4 rate cuts by the end of the year, and now they're forecasting basically none. So these changes are having a huge impact on investor appetite for long-term bonds, on yields, which translates to mortgage rates. Now, this week we did start off some improvements. We had some good ISM servicing and manufacturing data, which gave us a nice rebound on Monday. But then on Wednesday, there was an announcement by the Bank of Canada, another rate hike that was announced. And this kind of spooked the markets a bit. Maybe Bank of Canada wanted to go ahead with another hike. Perhaps our central bank would as well. So that changed the probability of a hike headed into next week. Now, we did gain a bit of ground back with some initial jobless claims data on Thursday, and there was some jobs data from Canada that came in lower than expected, which also helped kind of fuel a bit of a rebound. Now, we did finish the week, I would say, with a bit of defensive positioning, maybe a bit of a trepidation headed next week, which is going to be packed with market moving data. We have CPI, Consumer Price Index, on Tuesday. We have the Fed's announcements on Wednesday, along with the release of the dot plot. This is going to be a forecast by the individual Fed members of where they see the federal funds rate over the next several years. That definitely impacts the markets. We have retail sales on Thursday. In addition, we have 3 fairly large treasury auctions. So definitely a ton of market moving potential next week. You have any questions about these headlines, about these rate trends, or if you're curious how they impact you and your purchase power, give me a call anytime. This is Billy.Saylor, your mortgage professor, 571-330-5884. Enjoy your weekend.